Okay, folks, ladies and gentlemen, welcome to the class. Today we will talk about what is actually Forex. Forex, in simple word, I would say the change one currency to another currency. Now, if you are importing stuff from some other, like if I'm living in UK, if I buy something on even eBay from Europe, I have to send money in euros. Or if I buy from United States, I have to send money in United States, basically the exchange rate. Or if I'm going on a holiday, for example, let's talk about the holidays. Everyone loves holidays, don't we all? So what happens? I want to go to United States few days for business or for fun. So I live in England, so I have a pound sterling. So I go to the exchange, a bank or money exchange at Heathrow, and I say, excuse me, I have 200 pounds, and I would like to change that to US dollars. And what is the exchange rate? The exchange rate here, they will tell me, is 1.25. That means for every £1 I spend, I get 1.25 cents, $1.25. That's equal to £1. So what does that mean? If it's £100, then I will get $125. But because I'm changing £200, so I will get $250. Now I have anticipated in Forex. Now Forex and FX, it's exactly the same thing. So let's have a look. I go to States, I have fun, couple of days running around, and I spend $125, and I got $125 left in my pocket when I come back. So I get on the plane and I decide to come back to UK. So now I'm thinking for my $125, which are left in my pocket, I should be getting £100 back, isn't it? This is what is in my mind, because this is what I spent before I left. But what happened when I came to the money changer guy? He told me, sorry, sir, the dollar has become a bit stronger. So, and obviously when the dollar is stronger against the pound, then the pound goes weaker in the last couple of days. Now the price change every minute, every second, every hour, every 4 hours, every day, half day, it can change any time. This what you see here, it could have happened in even few hours. So this is this example. So before the pound was £1.25. Now £1 is only equal to 1.20. The dollar's got stronger. So what happened for my £125, I get $104. So here we are £4 profit. Sorry, I said dollar in the past. This is pound. I beg your pardon. So I'm in £4 profit. So instead of getting £100 back, I've got £104 back, which is excellent. Why not? Happy days. So now on the flip side of the coin, what we see here, I come back and I said to them, sir, okay, I would like to change the same $125. They tell me, sorry, sir, the pound is stronger now and the dollar has gone weaker. When the pound gets stronger, the now exchange rate is 130. 130 means for $125, I will only get £96 back. So in this game, I've lost $4. Oh dear, never mind. But this is what happens is a Forex. It goes up, down, then down, and then obviously more down, like you see here. So that's one side of the Forex market. The Forex is actually, it's a very volatile market. Now, I'll give you some examples globally, So what happens is the total volume globally, I'm talking about the whole world. Total volume of trading is $18 trillion in one day. Okay, that's a daily basis. 24 hours, the whole volume, which will include the Forex, the stocks, indexes, commodities, and everything you can trade under the sun. That's $18 trillion in one day. Now, why the Forex is more important, or why the Forex is favorable, look at this. The daily Forex contribution of this 18 trillion is $5 trillion in a day. That's a massive chunk. $5 trillion in 24 hours. That's globally all around the world, right? And let's compare that with the stocks. Now, the New York Stock Exchange market, New York Stock Exchange here, they trade $22.7 billion. That's also daily, And the Tokyo Stock Exchange, they trade $18.9 billion daily. And then the London Stock Exchange, which trades $7.2 billion a daily. Even if you put them all together, they still can't beat 5 billion, can they? 5 trillion, So that makes Forex a very, very volatile, risky as well, but high risk and high reward. Like I always say, you go into high risk, you take a big trade. If you lose much, you can also gain much as well, as long as you're on the right side of the trade. So that's what the Forex is. Like you can see, the $5 trillion a day is absolutely massive chunk, So let's go forward and let's see. Now, who are the favorite, countries which trade Forex? Now, you'll be surprised to know that London Stock Exchange is the most favorite for the Forex, which does 40% of that Forex trading daily. 40% of the Forex in the whole world, starts from GMT, Sydney, all the way to New York, 40% goes only to London Stock Exchange. Amazing, isn't it? Then the New York Stock Exchange is only 19%. We're talking about only Forex, Now, here, the rest of the world is 41%. The rest of the world, everybody comes in there. Sydney, Tokyo, New York, Germany, Hong Kong, China, you name it. But look at the basic is 40% is only in London Stock Exchange. That is several reasons for that. One of the reasons also, look at that. Here, London is also overlapping the Tokyo, the morning session, their closing session, and London's morning session. And here, London is also overlapping the New York session as well. So London has quite a lot of time joined with the other country timing. There's a time zone. So, but anyway, long story short, London is the most popular stock exchange for Forex, and it's got highest volume. Now, let's have a look. I'll give you another example to make it, easy for you, hopefully. Say that I get some fundamental news from China. I'm just giving an example of China here. Fundamental news is telling me that Chinese yuan will increase in value. Now, why is that? I probably have heard some news or a data is going to come out, or maybe Chinese has invented something which they're going to introduce after a couple of days or a couple of weeks, or maybe their GDP numbers are coming out, or maybe they're going to decrease their interest rate or something. It could be anything. It could be several reasons. I do my fundamental analysis and I sit down and I think about it and I say, you know what, let's invest in China. And what do? I got some spare pounds sitting, so I'm going to get Chinese, which is actually £1 is equal to 8.5 yuan. But that's just, imagine, this is only exchange rate, which is 8.5. And I have a reason to believe that it's going to actually go up. So what do? What extra money I have, either it's £100 or £1,000 or, 1,000K or 100K, whatever money I have, I say let's invest that in Chinese. Investing is Chinese economy, right? because I'm giving them pounds. I'm taking their money and I'm investing. So the Chinese economy becomes even more stronger when the foreign investor comes and they invest the money in China. Now, to make a profit from this growth in Chinese economy, the yuan has to become stronger, right? So what happens after 2 days or 3 days or 4 days, whatever the target is, whatever your news and fundamental analysis are telling you, the exchange rate has gone to 9 yuan. So the 9 yuan means I have made 0.50 pence profit on each pound, right? Now you can calculate whatever money you have invested, either it came out after 2 days or it came out after 1 week, doesn't matter, whatever your target was. So you have made a nice, decent profit. And after that, obviously, you buy your pounds back and sell Chinese yuan and make that profit. And simply, that means is foreign exchange, is currency exchange, and that's it. It makes you one of the participants in it, and that's all Forex is all about. It can be very profitable, or you can also lose the money, like I always say. So if you need to acquire another currency, that's Forex. Basically, as simple as that. And here we are. Right, see you at the next session. Thanks very much. Have a lovely day. Bye-bye.